Thank you for joining us. On Facebook, these new revelations, what do you think they're ultimately going to mean for the company?
I think, hi, Sarah. I think it means scrutiny and maybe some regulation. But I think it's important to differentiate between the infrastructure of Facebook that leads to bad behavior, that leads to young teen girls, for instance, feeling shamed or bullied, or the part that enhances hate speech. That definitely is a problem for Facebook and a problem for society. But we should also differentiate that from free speech, which if we start to regulate free speech, then it's a slippery slope, and we don't really know where it ends.
Which is actually something I wanted to ask you about, given all of your roles in media, as CEO of media companies, an investor in media companies. Ultimately, what is the right regulatory solution if you don't want to regulate free speech, but you also want to protect your kids from Facebook?
I think the algorithms that lead to all of these problems for Facebook need to be transparent. They're completely opaque. We don't know what's in these algorithms. We don't know why a particular piece of content gets repeated many, many times and other pieces of content don't get repeated many, many times. I think Facebook needs to be obligated to make those algorithms transparent and tell us what's in it. And is it good for us? Is it not good for us? But when it comes to content, we've got to be really careful. I'll give you an example. Earlier this year, Facebook, under pressure, had to ban any mention of the virus, the Delta virus, the coronavirus coming out of the Wuhan lab in China. And then later, a few months ago, they had to reopen that because it was shown that maybe it did come from the Wuhan lab. We don't know. And so Facebook should not be in charge of deciding what's right and what's wrong.
Eric, on the more fundamental level, there's a question as to whether Facebook's business, along with many others, is going to suffer as a result of reliance on iOS. Obviously, the changes there in terms of privacy by Apple may be impacting the ability to monetize. Is it a concern, do you think, for these companies, as we saw it was for Snap when they reported earnings last week?
It is. That, and there's a double whammy to that, too, which is the effects of the problems in the supply chain is leading some advertisers to curtail advertising because they have nothing to sell. And I think this is going to get reflected in the months to come. So the combination of the inability to target as much as you used to with the changes in iOS, plus the supply chain problems, could be headwinds for Facebook and others.
So are you investing in are you guys active in the space? Are you looking at any competitors as potential beneficiaries, or staying away from sort of social media right now?
Yeah, we're staying away. From an investor point of view, it's really a hit and miss. If you were lucky enough to believe in Facebook or believe in Snap, you were great. But there were 10, 20, 100 other companies that didn't make it. And given the size of Facebook and the other players, TikTok is a good example, it's very difficult to compete with them.
Yeah, well, one of your former portfolio companies, or certainly one you've invested in, Warby Parker, getting some positive play today. I'm wondering, just in general, private markets and private valuations, Eric, have been extremely strong. In fact, I know many hedge funds that have made their year not on their public equity investments, but because of their private investments. Are you at all concerned about the valuation levels you're seeing on some of the potential deals that you might participate in?
Well, we're early stage investors, so we're kind of in many steps away from that because we are typically the first institutional investor in the company. Warby Parker is a good example. When we invested, the company was worth $5 million, and today it's worth $6 billion. However, we do watch the limit between private and public. By and large, again, Warby is a good example. I think the last private valuation for Warby was $3 billion. Now they're trading around $6. So by and large, the public market still values private company more. But there's no question that the influx of late-stage private money makes that line a little more blurry.